Hey everyone, glad you're back. Simon from the Stock Talk here with another top stock pick list. One of the biggest goals when it comes to investing is obtaining a portfolio that yields income without you as the investor lifting a finger. And you're in luck, because dividend stocks are the backbone of this strategy. Companies that prioritise rewarding their shareholders for simply being shareholders are the hot topic for today, and there are some cracking options out there. You never know what we've got hidden up our sleeve, so be sure to stick with us here today. Right, let's get straight into it, shall we? The first company on our list owns over 500 buildings across nearly 40 states and is a giant of the real estate game. STAG Industries, ticker STAG, is really taking the market by the horns. Specialising in warehouses and light industrial properties, the company is renting out buildings at healthy rates and has a 97% occupancy, which is impressive considering the wider economic conditions. With a dividend of 3.4%, this could be a stock to run out on the road for. Next on our list is an REIT that specialises in agency mortgage-backed securities. AGNC Investment Corp, ticker AGNC, buys and sells mortgages and has a current portfolio of $84 billion in securities, all of which are backed by the federal government in the event of a default. Despite seeing a decrease in their stock price over the last year, mortgage rates are still at an all-time low, and the 9.5% dividend yield offered could be enough to get investors on board, so definitely think about jumping on. Speaking of the property market, one REIT that has deemed itself the monthly dividend company is Realty Income, ticker O. Owning more than 6,700 single-tenant retail properties across the US, Puerto Rico and the UK, the company has established a stable and diverse business operation and has displayed consistency, paying its investors over 600 monthly dividends in a row. In our opinion, Realty Income is worthy of every investor's consideration. Okay, so now we have the first three down. You might be spotting a trend here: REITs. Yep, that's right, they are often the best option for monthly dividend income, so don't leave just yet. There's a few more that we think could serve you well. Next up on our list is another REIT, but Armour Residential, ticker ARR, operates slightly differently. Instead of owning property, the company invests in mortgage-backed securities guaranteed by an entity sponsored by the US government, acting more as a financial institution than a landlord. Despite COVID exposing a chink in their armour, the company still boasts over a 16% dividend yield for its investors, an impressive feat considering their recent financial performance. While this may not be the last property dividend stock on our list, it's definitely one of the biggest. Green Realty, ticker SLG, is the largest commercial landlord in New York City, with nearly 80 buildings and more than 35 million square feet to its name. With a market cap of a staggering $5 billion, this stock has a clean, robust business model, and their 4.9% dividend yield could be as stable as a skyscraper for years to come. Investors should definitely keep an eye on the Big Apple. Another strong real estate investment trust option is Green Realty, ticker ADC. The REIT owns and operates over 1,400 properties across 49 different states, with most of the properties representing freestanding, single-tenant commercial retail spaces. Having only just pivoted into the monthly dividend game, I think we can all agree 4.17% is a great starting point for investors of this stock. Yet another REIT on our list goes by the name Dynex Capital Inc, ticker DX. As an investor in both commercial and residential mortgage bonds and securities, Dynex was hit hard by the pandemic, but has since recovered from the fall, offering a dividend yield of 8.7% to its shareholders. Q3 earnings announcements in the next few weeks will hopefully continue to push their stock in the right direction, so investors should keep a close eye on their progress. Okay, are you still with us? Brilliant, because you made it for the final stock on our list. And guess what? It's not an REIT. Despite the pandemic severely affecting their operation, Pembina Pipeline Corporation, ticker PBA, are well on the road to recovery. This Canadian company has transportation and storage capabilities for oil and natural gas operations, and also has a steady source of revenue through its long-term contracts with businesses in the sector. With a steadily increasing stock price and a dividend payout of 5.8%, this could be a great stock to add to any portfolio, especially yours. Now that's all for today, folks. These stocks should get you well on your way to building that all-important dividend portfolio that could get you one step closer to financial freedom. While not exactly a glamorous Wolf of Wall Street, he who dares win strategy, investing at dividend stocks, albeit alongside a diverse portfolio, gives investors the best chance at securing a regular payment from their vested interests. If you liked this video, let us know what you thought in the comments. And be sure to check out our best stocks for explosive growth in 2022. There is some stock-shaped dynamite in there. As always, take care everyone, and I'll see you in the next video.